Hello everybody, this is Pat Walker at MissionWinners.com. Hope you're all doing well. Have a good weekend, have a relaxing weekend. I hope you have the opportunity to get away from the machines. It's good to work hard, it's good to be diligent and focused, but there's therapeutic aspects, positive ones, to getting away from the machines. It's analogous to the quote thought from Abraham Lincoln, if I had 6 hours to chop down a tree, I'd take 4 hours to sharpen my axe. Again, it's just good to get away from it and do other things. I want to share something with you. A lot of people talk about what's happened this week. And there was some serious money given back, especially yesterday. And a lot of people have a plan to get in, but they don't have a plan to get out. I'm going to slide this over here and show you something. Right there. This is a book from Alexander Elder. All right, Trading for a Living. This is a great book. I encourage you to buy this book. He points out some profound thoughts. I'm not going to insult and read a lot to you, but I want to read part of this to you. It's fun, Dr. Elder. It's fun getting into a trade. It's a lot less fun getting out of a trade. People don't like thinking about it. And again, this is a professor in psychology, a doctor, okay? Doctor of psychology. Penn asked, what's more important to master, entries or exits? Dr. Elder, exits. This is very profound, folks. Please listen. Exits. I think exits are far more important. Beginners pay a lot of attention on entrance, but how you exit is really what determines the trade. Think about that. How you exit is really what determines the trade. You know, most every trade is profitable at some point. There are a few trades that just go bad from the get-go. Even the trades where people lose money have been profitable at some point. How come you didn't recognize it? How come you didn't grab this profit? Entrances are relatively easy. Exits are what separate experts from amateurs. That last sentence. Exits are what separate experts from amateurs. One of the things we love to teach at Mission Winners is entries, but also exits. What are some rules that you have? I'm going to show you a couple here, okay? A picture's worth 1,000 words. I'm going to show you some words here real quick. I'm going to do these. I'm going to go back to Tesla. I'm going to scroll back in time right here. These are actual trades that we did. Keyless stock. Downward sloping trend line. It was very easy to see, and it spiked up on a pickup in volume right there, bouncing off the 20-day and the 8-day, which is the yellow line, and it runs up. And right up here, I told the VIP members, sell some into strength, sell over half into strength. Why? Because it was a double top. Sell some into strength. Sorry about that. That was the phone. We'll let that ring. Hang on just a second. Hold on, please. All right, I'm back. I'm sorry about that. So there was a double top here. You have a plan. We bought down here, rallying up to this double top. I told people, sell off half your shares, and we'll watch and see what happens. And we did. Sold it into the double top. We had a plan. It drops the next day, but it's still above the 8. Falls the next day on low volume, still above the 8. The next day, it loses the 8-day exponential moving average. Right there, because we were closer to our price, we took the rest off for a profit. We had a plan, and the stock continued to fall. Again, entries are important, but exits are something that people need to address. I'm going to do some more here for you real quick. NVIDIA, you could pick it up here. You could pick it up here. It's walking up the 8-period exponential moving average. You let it work. It comes down and hovers below the 8-period exponential moving average. And then Friday, it gaps below the 8-period exponential moving average. What's a trigger that you can utilize? The 8 for a sell trigger. So you sell some off. It's still above the rising 20. If you picked it up down here, you're in good shape. But you sell some. We have rules. Here's another one for you. Alibaba. We bought this right here. It's actually marked. Bought this on volume, down low. See these little shelf right down here? I'm going to show you something. Here's the hourly chart. See that little shelf right there? I told everybody, I said, we're picking this up. And we did. It was on the key list the night before, by the way. And it goes up and marches on up, and everything's great. And we sold some and even sell it. Sell some into strength. I'm always big on a swing trade to sell some into strength. And people say, you're limiting your profits. Actually, I take the step back and say, I'm guaranteeing profits, and it allows me to let the balance of my shares work longer for me and minimizes the emotion stress of if it starts to drop, I don't have to panic out real quick. I can let it work. So we sold some into strength. Bops around here, and you factor the market environment at the time, which was getting choppy in the beginning of the week here, right? When it loses the 8 period right here, on a gap, I told everybody, it gapped down, did this, spiked up. I said, we're selling the rest for a profit. We had a plan. That's what we do. I'll take it a step further. SSO. We bought SSO right here. 101.54. And it's walking up the moving averages. All right? You sell some into strength. Finally, it starts to lose the 8-day, and you sell more. And we say, if it loses the 20, we'll sell the rest. We had a plan. Again, we have specific plans that are time tested. 31 years of doing this, you develop some rules that keeps you out of trouble. Are you going to sell at the top? That's liars sell at the top. I just want to get some of the trend. That's all I'm after, and be happy. Get the meat in the middle. Loses the 20-day, gaps down, loses the 20-day, market's falling apart. And I told the VIP members, I'm selling the rest. And we sold it right in here at around 119. 119, entry at 101.54. We'll call it 102 to 119 with low stress. That's good money. QLD, bouncing here off the 20 and the 8. Marches on up. Sell a little bit into strength. Comes down to the 8, but it stays above it. Finally starts to lose the 8-day. We sell more. Lost the 20-day. Gaps down and loses the 20-day. We sell the rest. You have a plan. I just wanted to share these with you. It's very, very important to have an entry plan, but also have an exit plan. It's a way to get out. And I'll say this once again from Dr. Alexander Elder. Exits are what separate experts from amateurs. We have a plan to get in, and folks, we teach about having a plan to get out, and that's what we do. That's what we do at Mission Winners. I wanted to share that with you. I'd love to have you part of our team, and I thank you for taking the time to listen to this. Have a good, safe weekend. Thank you.